Join us in our members area and become part of an amazing team of traders. Join us in our members area and become part. Before most people have even opened their charts, I've already planned my trades for the day. Ladies and gentlemen, fellow traders, friends, welcome to the live show on this wonderful Tuesday, the 14th of April already, 2026. Can you believe it's already the 14th of April? Half the year's almost gone. All right, a third of the year. A third of the year's gone. Hope you're all well, and I hope you all turn up soon and come to watch the show. Because today, not only am I going to talk about planning your trades early in the morning, not only am I going to talk about how to take your trades early in the morning and leave them for the rest of the day on a 4-hour chart, but I'm also going to talk to you today about fundamentals versus technical trading. We're going to go into a little bit of detail about how you can trade fundamentally versus technically on any given day. And that is really important in your trading. What I'll do is I'll wait for everybody to get here, and then we'll go and have a little look at how to do these little things that I'm talking about. Now, don't forget, trading is risky. Most traders do lose money, and if you don't like losing money and you don't like risk, you probably shouldn't be trading. Look at the little risk disclaimer that I leave permanently in the bottom left-hand corner there, just above the join the members area thing. That bit, yeah, that's it. That's the one. That's the one you need to be looking at. So I hope you're all here and hope everything is good. This is the UK 100 trade that I took, which hasn't quite worked out yet, but that's how trading works. We take a trade based on the possibility that it might win, understanding that the trade's 50-50, understanding that you could win or lose. And we put the trade in place, and then we leave it and we see what happens. That's how simple it is. I actually am going to go into detail about how we choose our trades in the morning, but to be fair, it takes me seconds to sort out what trades I'm taking, what trades I'm not taking. Sometimes it takes me a little bit longer than other times, but most times it doesn't take me long at all. But let's have a look at what's happening in the markets before we get started and all that stuff, and then we'll go into how we choose our trades and what trades are best. Because what you're looking for is the most high probable trades in the market. So what's the biggest probability? What's the highest probability? We're looking at the S&P 500, and as I said in the members video this morning, interestingly enough, futures have kind of steadied, indexes have steadied, oil has steadied, as we wait to see what's going to happen next. What's going on with Iran? What's going on with the ceasefire? What's going on with all these things in the background? How are they going to affect us in the market in the long run? Where are they going to go? So you can't really jump into any trades at the moment with any real confidence that it's going to go insanely long or insanely short, because at the moment it's just sort of neither here nor there. We heard last week that there was some kind of fragile ceasefire, and then that went kind of pear-shaped, and over the weekend on a Sunday there was almost a disaster, a situation of this is not going to happen. You're going to wake up on Monday morning with everything crashing down, and somehow they managed to save that. Say, no, we're still talking, everything's fine. You see, the fundamentals of the world are really, really important. But I said to you, we're going to talk about that today. We're going to talk about a number of things today. Firstly, as the title says, we're going to talk about how I choose my trades in the morning. And getting up in the morning for me doesn't mean I'm getting up at 4 in the morning and having coffee and running around and doing all these silly things that other people do. No, I get up at a normal time and then I choose my trades. Doesn't take me long. And then we can we go from there. But I'm also going to talk to you today about the difference between the fundamentals and technicals of trading. And I've always traded about 50-50 with fundamentals and technicals, or maybe about 60% technical. To be fair, maybe even 70% technical. And the fundamentals are insanely important though. And the reason I want to talk to you about the difference between fundamentals and technicals today as well, is also because it applies to how I choose my trades in the morning. It really does apply. And yeah, so I'll just wait before I get started, because I think it's only just gone 12 o'clock, and this video is only supposed to start at 12 o'clock. So hey, yeah, I mean, we'll wait for everybody to pitch up and give them a chance to come and join us, where we will go on about all those types of things. But anyway, the S&P 500, SPX 500, ES, whatever you are on, this index is SPY, whatever you want to call it, has been bullish. It's moving along nice and bullish, going along the trend, and it's bouncing to the upside. It's bouncing to the upside on a little bit of euphoria, a little bit of expectation that everything is going to go normal. But what you've got to be careful of in these markets, and what I've found very often in the past as well, is when things trundle on for a long time. For example, the Middle Eastern situation is trundling along for a long time. People start to put it at the back of their mind because nothing disastrous has really happened. So we kind of like think, oh, well, it'll just go away, and we start doing silly things like just carrying on like everything's normal. And then if something does go wrong, it becomes an insane move rather than a slow, gradual move. That's why you get these huge waterfall drops off of charts at the end of the day, because things happen rather suddenly, and they can be quite disastrous. So that was the S&P 500, and then you've also got the Nasdaq, which is really bullish at the moment. I mean, it really has bounced to the upside. Now, there was somebody asking me about Tesla last week. Now, if I go and have a look at Tesla, now I have brought up a chart this week for you because I thought it might be of some kind of use to you in some way or another. I'm just going to bring it up here, and I just want to show you what I do with an investment, just so that you get a good picture of it. So this is NVIDIA. So let's go to Tesla, and there's Tesla. And the person asked me about Tesla last week. I can't remember who asked me, but here you go. But my opinion of it is this, and it's pretty straightforward and very simple. It's not complicated in the slightest, and that is, it's been in a bearish downward swing. So here it goes to the downside. Now you can get these charts off Yahoo Finance. You see, my investment accounts don't have charts on them as such. So for me to get charts, I have to use my MetaTrader, or I have to use Yahoo, or whatever the case, because I don't trade shares anymore. I trade indexes, Forex, that sort of thing, and I invest in shares. And my investment accounts don't really bother with charts at the end of the day. It's a straightforward, like, you can have a look at all the information and fundamentals of a company, but you don't look at charts. But when I look at a chart for an investment, all I look at is, it is bearish. That's a 200-day moving average. That's a 50-day moving average. It's the only place where I use an indicator. And for me, I look at the golden cross. When it goes up, that's a golden cross. It means it's bullish. It's a good buy. And at the moment, Tesla is bearish. It's in a death cross, which means it's gone to the downside. That said, I don't sell my investments, so I'm not too worried about it. I'm not going to touch it. And that's why I don't even look at these things, because then you start going, oh, maybe I need to sell my investment. But I don't bother with that, because you can never, ever call the top and bottom of these things. So I just thought I'd show you that, and that's a death cross. So it is very bearish at the moment for the person who was looking at Tesla. I can't remember why you were looking at Tesla. You never said, I don't think, but that was what the situation was. And then, of course, okay, so Nasdaq is moving to the upside. It's very bullish based on all the other tech stocks are doing quite well. The Magnificent Seven are doing quite well on the Nasdaq. It's the Tech 100, in case you didn't know. Our US dollar Canadian dollar trade is doing very well. It's coming down nicely. So we're in quite a decent profit on this. I'll probably move my stop loss a bit later on, move it down into a more reasonable level, so that I'm not losing anything on this trade at all. I'll see how I feel about that. At the moment, I've just left the stop loss where it is. The UK 100 is not going for us at the moment. I did take this short because I believed that, you know, the markets are kind of going to go to the downside. I mean, particularly after what was said on Sunday. And then obviously things have calmed down again and euphoria is back in the market. And while we're here, hello, imaginary user, hello, I'm Blue Mango, and hello, Elaine. Welcome. Good to see you guys again. You guys are always on the show. It's always fantastic to have you guys here. And like I said, I am going to go over what I do in the morning, and I'm also going to go over the difference between fundamentals and technicals. Don't worry, I am going to go over that for you. I'm just going over the trades as we stand at the moment. Before we get to that, and allowing everybody to turn up so that they can also watch the training part of the video, so they don't miss anything and they don't miss out. Because, you know, I know what it feels like. You get there, oh, I'm late, oh, damn, you know, so you kind of missed out. So I'll just wait for everybody to get here. This is gold. Gold is one of our trades, and it is going to the upside. It is holding on quite nicely, but I'm getting a bit frustrated because it's taking a really long time for this to do anything. Been in the trade for quite a while, and it's costing in fees, obviously, and over the weekends it costs you even more in fees. So, you know, kind of sitting in the trade, but we'll see how that goes. Gold is in a profit though, and it is going up. The one that is being a real pain is the US dollar Japanese yen, but it has now moved into profit as well, going in the right direction. And there is a sort of a head and shoulders that's created here as well. And if it does break below that shoulder, we could be looking at a really decent fall all the way down to the support here, which would be really good. So that will make us all our money back, because I've been in this trade for quite a while as well, and it's, you know, it builds up, you know, those costs build up in these trades. But, you know, if you make enough profit, yeah, it's great. There's no real issue with it. But I'm going to get on to, you know, how do we choose our trades in the morning? Give me a sec, we'll get to that now. US dollar index is pretty much crashing down to the downside here. It's doing the old, I think I'm going to go all the way down to support thing, which it might just do. So there's a good chance of that happening, by the way. Good chance that it's going to go all the way down to the downside. Well, that's quite interesting. But the VIX is relaxing. I'm actually very surprised that the VIX is relaxing so much, based on everything that's happening in the world with the geopolitics. And it's quite insane to think that the VIX is so relaxed at the moment. So I might, if I get a chance, I might get into it again. Might get another trade in. We'll see how it goes. We'll see how it picks up, how the trades go, and where it goes. The Nikkei is moving to the upside. It's insanely strong. It's going really well. Let's go and talk about how we choose our trades. And you know, it's so simple to choose a trade. I mean, I come in the morning, and you guys know that I've got my favorites. And no, I'm not one of those guys that gets up at 4 in the morning, or one of those people that gets up at 4 in the morning and comes rushing down to the charts all excited, goes and makes coffee. Well, I do make coffee, of course I do. Now I'm having water, look at that. But, you know, gets up at insane times of the day and stuff. I get up at a normal time every day, really do. I mean, most of you took on trading to have a good life, to have a better life, not to make it more difficult for yourself, not to be trying to get up at ridiculous times of the day and suffering and struggling and working 16 hours a day and things like that. Most of you got into trading so that you could have a nice day, so that you could enjoy your life, so that you could have a better life. Yes, some of you just got into it just to make the money. I get that. But a lot of you got in because you wanted a better life more than anything else, I believe. And to do that, you know, you don't want to be pushing yourself over the edge and all this. You know, you do have to work hard to make the good money, but by the same token, I mean, you did it for a better life. Otherwise, you might have stayed being a doctor or a lawyer or an electrician or plumber, I don't know. Now, what I do in the morning, the first thing I do is I come down and I have a look at what's available, what's out there, what's going on. So I'll have a look and I'll see. Now on these trades that I'm generally trading with, I can see where my levels are. My levels I've put in for the week, so I know where they are, and I can just move them around as I need to, or as I see or please. So it's very easy to check these, and I just look for the ones that are close to the resistance, close to the support, or where we stand with them. Do I need to make any adjustments? Do I need to take any trade there? And if I find one that's close to the support, close to the resistance, then I'll look at my trend and see if it's counter trending or if it's in trend or where it might be. Now I'm going to go through all of these charts in the morning, and I'm going to see if there's a trade. And if it's far away, I'm not even going to look. It takes me minutes to do this. Okay, I said seconds, let's say minutes, and there's a trade. You see, And that's the trade I called this morning. Bitcoin, short. That we're looking for a short trade on Bitcoin because it's hit resistance. But I now know that what I need is for that red candle to close. And I know that it's not closing now, it's not closed yet, so I need to come back and check on it a little bit later and see if it's closed. So I'm going to leave it for now. And if it does close, it's going to be great because that's going to be a little pincer top. You're probably going to get the next red candle down. So now I know I'm watching Bitcoin. I know that Bitcoin is one of my trades. I put it on my list, which you guys get every day. Well, the members get it anyway. Every day you get the list of the trades I'm looking at and which way I'm looking at them going and what I'm doing with them. So now I've already decided that I'm looking at Bitcoin for a short trade. And that's in the pile. Now I keep going and I have a look at the US dollar ZAR. Oh, and by the way, before I start looking at these charts in the morning, and I almost missed this, and I hope you guys don't mind me forgetting things, but the first thing I do when I look at the charts in the morning is I look at the news on Yahoo or Bloomberg or one of those, just the written news. I just want to see the headlines. I just want to see what's going on in the world, which is why I said to you, I want to talk to you guys a little bit about the difference between fundamentals and technicals, because I apply that in my trading every single day when I choose my trades. So when I come in the morning and I start looking at my technicals, I don't just look at the technical charts. I first look at the news. I first go to maybe Yahoo and I just look at all the headlines and I say, what's the headline for today? Has the world ended? Has a bank gone bankrupt? Has Trump said something? Are tariffs in place? Is there a ceasefire? Isn't there? What's happening with that? You know, what's going on with the news? Has Russia said something? Has China said something? That's important news. I'm not looking for CPI data. I'm not looking for jobs figures. I'm not looking for those things you get on a weekly basis. What I'm looking for is important news that affects maybe Nvidia, maybe Tesla, maybe big companies, maybe something's happening in the world that will move markets forward. Maybe petrols become so expensive or diesels become so expensive that companies are going to do really bad. Then once I've looked at that, then I start doing this. Then I start going through my charts and having a look at what's happening. So for example, this is the US dollar ZAR. I'm looking for a long trade or a short trade on this based on what happens on this trend, because it's in the middle between the resistance and the support. But now I see it's lying on the support. It's either going to go long or it's going to go short, but I do need to wait for a candle there. So now I've got BTC, ZAR, make a note on my spreadsheet or my sheet or whatever I'm using. Make a note of what I'm looking at for the day. This is a Nikkei, it's going up, not bothering with that. Germany 40, am I going to do something with this? Oh yes, this looks like something that could be a trade. So it looks like it could be a long trade, looks like it could bounce to the upside. But I looked at the news before I looked at the charts. I did look at the news before I looked at the charts, and I decided that all indexes are on a hold. They're on a wait. Why are all my indexes on a wait? All my indexes are on a wait because I don't know what's going to happen next. Because the news is fragile. Because there is no final agreement as to what's going to happen. So I don't want to preempt it. I want to have some factual information on that. So this is on a wait. It's not going to be a trade as it stands. I would like to take a long trade there, but I could be wrong. And I have already taken a short trade on the UK 100 based on what I thought was the news. Turns out that it wasn't. Turns out they changed their mind, because I thought that they had already decided that, you know, this ceasefire is over, which meant this would go short. And it was in the right place technically, and the whole thing fitted together. I thought, oh, great short trade. And well, now it's going sideways because nobody's really sure. So that should have been on a wait as well. But since we're already in the trade, we've already paid to take the trade, we'll just stay with the trade. We've made a decision, and that's that. NASDAQ looks like a great long Tech 100, but as I said, all the indexes are on a wait. Now, I could sit here and go through each and every one of these charts for you, but you know, we're not going to do that. Then I look at trades that I already own, for example, US dollar, Japanese yen as well, and I see if it's going in my favor or if it's insanely going bad for me. Then I take these trades in the morning, I walk away and I leave them. And if there's nothing on these charts here, I will actually start going through this list on the side. and I'll start going, all right, let's have a look at what we've got here. Is there anything here that I might be interested in trading? Would I be interested in trading coffee? I don't know. Maybe not. And I'll put it up there and I'll have a look. And then this, you'll notice, is on a day chart. And the reason I keep this one on a day chart is because I take my levels from the day chart and I will take it back to the 4 hour once I have my levels. So I'm going to have a look at, for example, I'm looking at coffee here, and I'm going to say, now what's happening with coffee? I'm going to say, all right, that will be my resistance. So my resistance is going to be quite high up here, quite far away. And my support is over there. And I'm looking at that. It's bouncing off support. If I really wanted to, I could actually buy coffee, for example. And then I'll go down and I'll keep on going down. Maybe I'll want to have a look at cotton, for example, and I'll go through that in the morning. But this is not going to take me as long as for example, what it's taking me right now talking to you guys, or as we go. There's a lot of other forex pairs that I might want to look at that would be interesting to me. For example, maybe I want to look at Euro Canadian dollar. So then I'll do some research on the Euro Canadian dollar and see what I've got there. That's just what I do in the morning. And in the morning, I'll take those trades, ready, walk away, go and do my other things. Go for a walk, have breakfast, go down the beach, do what I do. Every day, I take a walk to the beach. Every single day, take a walk to the beach. It's a good distance. It's about a K, whatever the case there, and then a K back, no problem. And it's a round trip. Every day I'll take that walk. It's good for me. And then some days I'll just walk down to the shops. The cars stay parked in the garage. I mean, I really don't like driving around much unless I need to. So that's how I spend my day. I come back and check my trades and maybe make a YouTube video for you guys. And that's as bad as it gets. Now, the difference between fundamentals and technicals is something that we're going to talk about now. Now we're going to talk about the difference between fundamentals and technicals, because that's quite important to understand. Okay, so did you look for support and resistance in the daily chart? If we trade in the 4 hour, the trend lines should be drawn on the 4 hour and the 1 day chart. I look for the support and resistance 9 times out of 10 on the day chart because I get a better result there. So I'll go to the day chart to get that support and resistance. It's easier to find it. That's why I do it. You can draw it on the 4 hour as well, but it's just easier to find it when you're on the day chart. I just find that when I draw the trend lines in on the day chart, they disappear and they're too big for the chart. So and the trend line is for an immediate trade. It's for now. It's for right now. Whereas the support and resistance is kind of like telling me where my levels are, and I can trade off the support and I can trade off the resistance. Those are areas, important areas that institutional money is trading at. So that's why those areas are there. And then I'll go back to the H4, and then on the H4, I'll put in my trends, because the H4, that's where I'm trading off. And then I'm looking at, okay, I'm coming off the support. If I'm breaking a trend, I know where my support is. I know where my resistance is. Best place to trade from, obviously, is right at the top. So if you do get a trade right off the top, for example, here with the US dollar, Japanese yen, where we get a trade right off the top with a break through the support, that's just like excellent. Okay, then it comes back and retests. Happens, and now it's coming down again, and we're going in the right direction. So if you get it right off the resistance, that's obviously the best, yes. But I draw the resistance in on the day, I draw the support in on the day, and I draw the trend in on the 4 hour, because the trend is something that you can use just to make a decision for your trade. Now, the unfortunate thing about trends is that's why I don't only trade with trends. That's why I use the support and resistance, is because trends can move around. Trends can move around, but you want 3 touches on the trend. Okay, but you see that trend has now moved. Unfortunately, it's moved. But when we took the trade, it was all the way up there, and it was a good take. All right, now your trend can move, and it can move down to there, and it gives you a new level. You have to understand that with trading. That's just how it is, which is why I include the resistance and the support, because the resistance area is a very important area where all the money lies. And the support area is a very important area where all the money lies. The break of structure, or the break of structure or the change of structure is very much in the trend, or it's staying in the trend, or it's moving, is very basic. It's very basic, and as you know, I'm drawing it in on the 4 hours just to tell me, or to give my brain that feeling like, hey, listen, it's changed direction. It's going the other way. But with an understanding that these trend lines can move around and change on a regular basis. So just as long as you know that, you know I'm coming off the resistance, I know I'm coming off the support, so I know I'm in the right direction as it stands, and why we're doing that. So the difference between fundamentals and technicals is really quite simple, and I wanted to put this forward to you guys because, like I said, in the morning I come in, the very first thing I'm going to look at is the news to see if there's anything big happening in the world, because there's no point in coming in to the charts and looking at the technicals and going, okay, I'm going to sell that, and then there's a huge news event in the background that's just going to destroy your trade. You know, somebody said the other day, it's very difficult to trade with these lines at the moment because of the things moving up and down and the problems in the background and Trump and all the rest of it. But that's what moves the markets. And funnily enough, over the years, what I've figured out is the fundamentals fit in very nicely to the charts. And the reason for that is behind these charts is human beings. And human beings are doing the trading. And 95% of those human beings, 95% of those human beings, would you believe, are actually institutional money. It's big money that's trading. And that's why you find the movement. But what is the difference between a fundamental situation and a technical situation? And it's really simple, really. Think about it this way. Imagine that you're in a foreign country and you want to buy some food, and there's 3 different shops, okay? 3 different takeaway shops or restaurants. Now, you don't understand the language, so you can't really ask anybody, you know, like which one's the best. So you have to figure it out for yourself. And effectively what you do is you go to each restaurant or each takeaway and you have a sample and a taste of their food. And based on that information, you decide which takeaway or which restaurant you're going to eat at. Because you've gone in, you've sampled the food, now you know exactly which one to go for. But let's say that's a bit far reached and you can't actually do that and no one's prepared to give you a taste. What do you do then? So then you stand back and you look and you watch the shops for half an hour. You sit and watch the shops and you see which one all the patrons are going to. Where does everybody go to get their food? What's the busiest one of the 3? And you can see, well, everybody goes to that one in the middle. So you choose that one because that's the most popular one. It could be because of price. It could be because of quality. You don't know, but you figured out that that's the one to go to. Do you get the point? Here's the thing. The first example I gave you, where I said everybody goes and tastes, that's fundamental. You're making a fundamental choice based on what you've tasted and felt and looked at the price and all the rest of it. The second one is technical. You're looking at what everybody else is doing, what everybody else has done. And that's effectively what technical trading is. That's effectively what candles are. That's effectively what charts are, is you're looking at what everybody else is doing, what the big money is doing, how it's moving up and down, where it's going. That's technical trading. Fundamental trading is you're going in and you're sampling for yourself what's happening in the news, what's happening in the politics, what's happening in the world. And if it's a share you're buying, maybe you're looking at Tesla, maybe you're looking at Nvidia, then you're going to go in there and you're going to go and have a look at their financial results, who the CEO is, what their price to earnings ratio is, all those types of information, what the company's asset value is, does the asset value match the price of the company? All those different little things will apply to you when you're purchasing, and that's fundamentals. So that's the difference between fundamental trading, technical trading. But do you have to trade one or the other? Should you just trade with fundamentals? Should you just trade with technicals? Well, some people do. Some people only trade with fundamentals and tell you to take the charts and shove them where the sun doesn't shine. And others tell you that they'll only trade technicals and they're not interested in any of the fundamentals whatsoever. But if I look at that, and the way I've always looked at it as, well, if I ignore the fundamentals and I only look at the technicals, then I've got a situation of I only really know what I see. In other words, I've only got these technicals telling me what could or might not happen. And if anything's about to change in the world, I won't know about it. So it's a bit like being a bot or trading like a robot. I'm going to be trading with blinders on. I'm not going to see what's actually happening in the background. And the same goes if I only trade with fundamentals, then I'm looking at a bit of information, but I don't really know how many people have bought or sold it, if it's overbought, what's the real value of the price at the end of the day. I can compare it to one or two others, but I don't really have all the information at my disposal. So I made a conscious decision many years ago to apply both, to make sure that I always apply both, have an understanding of fundamentals and have an understanding of the technicals, in which case you can trade something, in which case you can understand why something is happening. And even if you're investing, as I said to you earlier when somebody asked about Tesla, even if you have an understanding of charts, and you don't really need to know that much about them, but you can just take this chart and say, should I buy this or not? Well, it kind of looks like it's going down. Perhaps I should wait until it starts going up before I actually make an investment into this product, for example. And that's just an example from my side as to, why I would be cautious on looking at just the one or the other, even if I'm just an investor, not even a trader. I want to see what's actually happening in the world and what's actually going down and what's actually changing on a daily basis. So if you've got any questions on the morning routine, and you've got any questions on the differences between fundamentals and technicals, now's a good time to ask them, because I'm here. Right, now, here's a question, but how far back in the daily chart should you go looking for support and resistance levels like the last 6 months, 1 year, 1, 2 to 3 touches? Normally 1 year is enough. You can do it on 6 months if you like. But what I do like to do on most cases is try and go back as far as you can. Let me just find a decent chart for you to look at. For example, let's just have a look at something that makes sense. Like you can actually look at. Okay, so here's the DAX, right? Now I've taken it back quite far. I've taken it back. Oh, wow. This is not that far, actually. It's only gone back a short while. Let's see, that's about as far back as it goes. Now that's on day chart. Okay, there you go. This has gone back all the way back to 2019. That's quite a long way back if you want to. Or you can bring it up. You can take it back for a year, and that's all you need. Okay, so what you're looking for is the last 3 touches, effectively, the last 3 touches. There's no point in really, how can I put this, looking for the support. See, this is, for example, this is what, a few years, okay? So what you're going to do, draw your support down here. It's going to take you a few years to get there. So you're looking for your closest support levels, your last 3 or 4 touches, which is in the last 6 months to a year, normally. And that'll be on the top here. So you're looking for the closest ones you can possibly find, and on the top here as well, because you want it to happen within a reasonable period. If you're going to take the last 4 years, for example, then you're looking at a support level somewhere down here, which it's never going to reach. It's going to take forever to reach that. I equate it to someone that told me that, for example, Forex is cyclical, so you don't need a stop loss. Forex is cyclical, so you don't need a stop loss. And I found that quite interesting because when they say that, if you go and you take, for example, the euro US dollar, and they say it's cyclical. So, yeah, at the end of the day, it doesn't matter. It's always going to come back to the price. The trouble is, if you take this back quite far, you'll find out that the US dollar was at 130, I remember, and then it was at 1-to-1. Okay. Now, if you took a trade on the wrong side of 1-to-1, which is down here, I think we can see it nicely down here. It was in 2022. It was at 0.95. Now imagine if you are taking a short at that point, right? Or even somewhere around this point, and it's now 2026 and it's hanging around the 117 level. Same goes for, it was at 130 a few years back, probably 2019. If you took a trade on the wrong side of that, it really hasn't got back to that, has it? So it's not as cyclical as what you think it is. So be careful of listening to stories like that. Stop loss is important. You want to get out of your trades when you need to get out of your trades, because holding on to your trades forever does cost money and it does become expensive. So don't think that, oh, I took the wrong way, but don't worry, it'll come back and I'll just get out at cost. 3 years later, you're still waiting for it to come back and get you out at cost. It didn't work, did it? It's not going to work. That's not how things work. So even if things are cyclical and they go up and down, doesn't mean they go up and down on a regular basis. It means they go up and down over time, you know? I mean, the thought of it is just, it's insanity when I think about how some people think of these things. If you get this trade wrong, take the stop loss, walk away, don't worry about it. It's all good. Just take the stop loss and go. It's fine. Don't worry about it. Which, see, now this is how you move your stop loss. There's cost. So what I'm going to do, I'm going to put my stop loss sort of in the middle of that candle above those highs and just modify that trade. And the stop loss is now moved into a small, tiny little weensy profit sort of cost. And I can't lose anything on that trade anymore. Great stuff, you see? Now I'm just heading for profit. Now I'm just looking for the profit. That's all I'm doing. And that's my target now. Easy. Okay, right. How's it sold? Yeah. I've heard of algorithms that measure the sentiment by scraping the web, but I guess we can look for the global news. If you trust AI or you trust an algorithm, I don't know if you've noticed, I used a bit of AI in my videos lately. Probably shouldn't do that. I should probably negate it and get away from it and just carry on. I'm always into trying something new. I don't know what is with my brain, and I'm always trying to try something new or the latest thing or whatever the case. And it either works or it doesn't work. But anyway, yeah, I'll probably negate that in the future and just move back to the normal way. But with trading as well, AI is dangerous. Bots are dangerous. Algorithms. You know, the thing is, it's exactly what I explained to you at the start, is you get something and you only trade 100% technical. And if you want to trade 100% technical, you can put 2 or 3 rules in place and say, this is how I trade. I mean, go for it. I mean, you can do that, and you can put a robot in place and say, just go and do that for me, and it'll do that for you. But when things go pear-shaped, or somebody says something, or something happens in the market, the global focus, as you say, you're not going to know about it. That robot's not going to know about it as much as it's scraping. How much do you think it's got to scrape to know that? I mean, it's a robot, for heaven's sakes. It can't listen and see what's going on in the world. Yeah, breaking news. Yeah, TV comes on, something happens, or social media tells you, whatever the case. And then you start looking at it and thinking, what's going on here? You know? You want to know. You want to know. You want to have a heads up, because your money's in there. Your money's in the market. It's not just willy-nilly. It's your dosh. and you want to know what's happening with it. You want to know if it's going to work in your favor or not. You don't want to leave it up to an algorithm. An algorithm's trading your money. And I know that the turtle traders did that. They didn't have an algorithm, but basically the boss told them, listen, this is what you got to do. And if it goes above that line, you buy, and then you're not allowed to sell. And if it goes below that line, you sell. And he took novice people and taught them how to do that. It's basically like having an algorithm. And great, it worked. It worked, but it only worked a small percentage of the time. And they were fortunate enough that they were having good long breakouts, and it was making them good money. So that particular system, it actually worked with. But it doesn't work on all the systems because people were actually complaining about it recently. In the last few weeks, I saw people complaining that it's very difficult to trade on these lines simply because the news is moving up and down so much. And if you're finding it difficult as a human being to trade on these lines because of people saying things and changing things around and whatnot, can you imagine how difficult it must be for an algorithm to trade on these lines and move things up and down on a regular basis? It must be near impossible. So I just say I wouldn't play much into trading with a robot or an algorithm. It's not going to be good for your trading as such, and it's probably better to leave that out of your trading. So yeah, just a thought. Use it, don't use it, I don't know, whatever you want to. It's perfectly okay. Now let's have a look and talk about the charts as we stand at the moment. If there's any questions on the difference between fundamentals and technicals, if there's any questions on how you choose your trades in the morning, feel free to ask them, because I've gone over that. And if you've missed that, it's at the beginning of the show. Obviously, we've talked about it at length. For those of you who are watching on shorts level on phone or whatever, you're not going to get the full chart. It's actually better to watch on a PC or a TV or something like that. But yeah, because it only picks up the middle of the screen, I think, something to that effect, when you're doing it on the phone at the moment. And you'll only hear my voice. You won't actually see me on it either. Don't know why it doesn't actually compress it all in, or whatever the case. Maybe I should have a look and see if there's a setting or something that we can use, but very much that's how it is. Oil is did come down, did have some nice big red candles going down, and then it's sort of hit this level. It's very undecided in the markets at the moment, because nobody really knows what's going to happen with this, with the talks, with the ceasefire, with the Strait of Hormuz, or whatever you call it, and you know, the tactics and all the rest of it. But is it just going to stop there? Is it just going to end there, or is it going to get worse or better? Euphoria in this case is actually going to be quite a thing. It's actually going to move markets quite fast. It'll move oil quite fast, but I actually find it strange that oil is not worse off or more expensive as it stands at the moment, because even though there are talks in place and everybody's chatting about how we can sort all this out, oil is still kind of stopped, and it is still kind of a problem. Now, I believe that old Trumpy did say that the Strait only handles 20% of the traffic, but 20% of the traffic, or the oil traffic alone, is huge. It's a massive amount of traffic if you think about it. And what he's done at the moment, I believe, is stopped the Iranian oil tankers from moving around, which is interesting, or the Iranian oil from moving around. And they were trying to stop America's oil, or whatever the case. So there's a bit of argy-bargy going on there. And I would have expected that, you know, oil struggling to move around would have been a problem. But at the moment, it's kind of sitting in this area of nowhere, because everybody is undecided, unsure, and unaware of what's going to happen next. I did see someone get excited that the markets are now moving up. Is this the beginning of a big shoot up? But, you know, I've got a big resistance along the top here on the S&P 500, and you can see it, a big resistance lying across the top here. That's 7,000. 7,000 is a really important level. And you remember in previous videos, I have told you guys that You know, round numbers are insanely important. If you get a round number like a 7,000, a 6,000, a 6,500, a 7,500, a 10,000, those are round numbers. Round numbers are really important because psychologically human beings base all their facts on a round number. If you tell somebody it's 6,996.55, they'll be like, okay, 7,000. And that's kind of where the person's going to put their line. They're going to put it at 7,000. So those are important numbers. So what I say is 7,000 is a really important number. And of course, around 6,300 or 6,350 would appear to be another important number, which is probably 6,000 or 6,500. Important numbers to look at, important numbers to keep in mind, because that's where human beings tend to work. But as we stand at the moment, the S&P 500 is going up. It's bouncing to the upside. Bit of a red candle there. So there's probably a tiny little bit of negative news out there, or whatever the case. Nothing serious, obviously, otherwise it would have come tumbling down. But this is also still very, very undecided. And if you look at this from another perspective, there is a level here that exists. You don't want to put too many lines on your chart. Start drawing level after level after level after level after level, because it's just going to confuse you. But the main level's above it. But there is a level here at 6.9 as well, which is holding people up, making people think, ooh, should I or shouldn't I? 6,900 is also quite important, but 7,000 is the main level. That's the level we're looking at. And that's the level we've taken from the day charts. That's the level we've looked at on the day charts. This might reach 7,000. I doubt it. Looks like it's going to turn around on 6,900. Otherwise, it goes up, breaks up, and there's euphoria. We'll see if there's any euphoria. I don't think we're going to get any euphoria this week. That said, like I said earlier, the VIX is kind of interestingly dropping off. Where's it going? It's just dropping off and falling away. There's just no volatility, is there? It's quite quiet. You know, the VIX being quiet is interesting. I find it time-consuming to tweak and test strategies with code, and the results are all over the place. Also, as you tweak the algorithm for max profit, you only get a few trades a year out of it. What I normally say, and I'll get shot down 100 times for this, and people get really annoyed with me for saying this, but backtesting is rubbish, and tweaking it and changing it and trying to reinvent the wheel. Traders make too much work for themselves. Traders make journals, they make pages, they create systems, but if you just keep it simple and you look for the buy and you need two things in trading. You need to know where to buy and you need to know where to sell. That's all you need. And you're going to say, but Rob, that's not easy. No, it isn't, is it? It's insanely difficult to find that buy and sell point, especially when you've got a chart in front of you that looks like this. It's just blank, isn't it? Just need to know two things: where to buy, where to sell. But backtesting and all these strange things, you know what's going to happen next. So what's the point of it? If you want to test a system, and I know the never-ending cycle of doom because a system failed on you, so you go to the next system and you try that, and then you go to the next one, and you keep trying these systems, you keep backtesting them. Now, listen very carefully when I say this. Every single system in the market works. Every single one. Because someone designed that system. Someone picked out a system and said, you know what? This system works. This is the best system on the planet. And you know what they did? They backtested their system. They backtested it and said, you know what? I got this and that and that and that result from the system, and it works. So they've done all the work. They've done all the backtesting. They've done all the checks, and they've proved that it works. And then you come along and you redo all the work. Why? Because you want to prove to yourself that it actually works. But what's the best way to prove to yourself that it's actually going to work for you? Because every single system in the market works, but does it work for your brain? Does it work for your fear? Does it work for your patience or impatience. It's like I've said to a lot of people, is if you've watched the intros on my shows, or if you find me a little bit slow, or it took a long time to get there, and you just said, why don't you just get to that point? Then you're impatient. And if you're impatient, don't be a trader. Go and become a plumber. Trading's not for you. Because impatient people should not be traders. Because trading requires insane amounts of patience. But that's just one point. If you're picking out a system and you want to try it out, do the opposite to backtesting and forward test it. Now you're probably trading already, so carry on trading with the system that you're using that you're not happy with. And it's not the system that's failing, by the way, it's you. Something's changed in your mind, something's misclicked, and that's why your system's failing, but that's okay. Your system's not really working out too well, but don't change it, just carry on with it. Take the new system and take it manually, not with an algorithm, not with a bot, not with a robot. You, a human being, open a demo somewhere, get a demo account somewhere. There's loads of them available on the market. Just pick a trading chart and have a demo, right? Then take that demo, or even a cheap funded account or whatever, and then forward test that system. In other words, for the next 2 weeks, on the side, every time you want to take a trade, check that system. Don't let it confuse you with your system, because it is going to work against you 9 times out of 10. Look at that system on the demos and take those trades on the side. Take the trades and see how they work out. Then that will depict how your brain is working with the system and how your patience is working with the system, how your fear is working with the system. There's a guy out there always says, sit in your hands. Sit in your hands. It means wait. It means be patient. You know? So check how that system works for you. And then if after 2 weeks you can see, hey, I can make a profit with this, this really works for me. Because you see, the thing is, with backtesting, it's already happened. We've seen it happen before and we know how it's worked. But with the market being an evolving thing, you know, I don't know if you realize this, but the market's alive. It evolves, it changes, things change on a regular basis. And you have to adjust. You have to adjust according to what the market's evolving into. And it might be because there's a bit of a problem in the Middle East. It might be because Donald Trump got elected. It might be because Joe Biden gets re-elected. That wouldn't be possible, would it? But anyway, there's a reason behind these things that happen, and you have to understand that fundamentally it's going to affect your trading. It's going to affect the way you trade. It's going to affect how you choose your trades. That's just how it is. No questions. But yeah, it's important that you forward test it. You have to forward test it. And if you forward test it, then it's because of all these things that have happened in the past, because of all these things that happen on a daily basis, then you can determine if the forward testing is actually working for you, and if the system is actually working for you, and if it's actually going to be profitable or not. But as you know, the system doesn't make you money. Charts don't make you money. Charts can't predict the future. You can't predict the future. I can't predict the future. Nobody can predict the future. We don't have crystal balls that work on charts. The only thing we can do is take a high probability trade. But that's all well and fine. Charts don't make you money. Win rates don't make you money. Somebody said to me the other day, you just need to win more trades than you lose. But that doesn't make you money. It doesn't. It gives you a win rate. But if you win $50 on every trade and then you lose $1,000 on the 7th trade, it's not going to help you. Not going to help you in any way, shape or form. So you've got to follow our business plan and our strategy, which you already know. Hopefully you guys know it already. But if it's your first time watching me, and if you don't know me, I'm Rob. Then you should understand that you need to keep your risk the same on every single trade. You need to keep the risk the same. And also you need to make more on your wins, lose less on your losses. In other words, you need to target bigger wins than you are targeting your loss, because there's no point in making less than what you're risking. You can target a one-to-one and follow it up, but try and target making more than one-to-one. How do you keep track of all your open trades? Do you just look at them twice a day? Open trades are easy because there's always information on your open trades on every account, so you can just simply open the statement up and it's there, and you can see it on your phone. You can see what's going on. So what I normally do is, even if I'm out, maybe I'm at a restaurant having lunch, and I'm thinking, gee, I wonder what's happening with my gold trade. I wonder if it's okay. Pick up the phone, boom, have a look. Oh, that's what gold's doing. That's fine. If there's a natural disaster or something happening, then of course I'm going to sell it. But I try not to do that, because I've done it a couple of times, because you look at the phone and then you immediately see something, and then you quickly jump out of the trade because you think the world's going pear-shaped. You come back to the PC for a proper bit of research and you find out you've made a terrible mistake. You just jumped in at the wrong time. So try not to do that if you don't need to. If it really does look really bad, then of course, yeah, then you need to do that. But other than that, your trades are normally in place. For example, your stop loss, your take profit, it's normally in place. You know, kind of trust it and kind of leave it on that, and don't over trade. Because that's why I don't watch charts all day, is because when you see things going against you, when you see things working not in your favor, or if you see a profit, you think, oh, it's in profit, I need to take that profit. This is a natural human reaction. You're in profit like this. Okay, so you see that profit, you see it's a decent profit, you think, oh, if I click out now, I'm just going to walk away with all this dosh, and I can just go and buy coffee galore and do loads with it. No, you don't want to do that. So that, if you're looking at charts all day, that's what you're going to do. And in particular, that's why day traders suffer. It's because they sit watching their trade on a day trade, and it's going, click out and take the profit. Because you can go and buy all that coffee, right? So I like to leave the trades in place like this, and then I'm sitting here talking to you and I spot, oh, it's nicely in profit. Take the stop loss, move it into profit, leave it there. It's not costing me anything anymore, and keep vying towards my target. Leave it at that. Keep it simple. I normally come back, and yes, I do normally come back and check it a couple of times a day. Definitely not once a day, a couple of times a day, maybe more than twice. You know, if I leave it in the morning, I'm definitely going to have a look at it around the lunchtime area, and I'm definitely going to have a look at it again in the afternoon, especially at the US Open and that type of thing for me. And then I'm going to have probably just check it on my phone in the evening to make sure everything's okay. You get those days, for example, Fed meeting days. Those are nasty days. I mean, those can go either way. So you really want to just sort of check what the results are, what happened, what did they say? You know, oh, we're increasing the interest rates. Ooh. You know, you might want to know that. So things like that, you want to go back and check on it. You want to go back and see what's been said, how it's been said, when it's been said. But other than that, try and leave your trades in place. Try and leave them there, because you're going to find yourself over trading if you're watching trades. If you're sitting watching, doesn't matter if you're trading on the day chart, doesn't matter if you're trading on the weekly chart. If you're sitting watching it, you're going to see things, and you're going to be like, ooh, you know, I've got a problem here. I need to be careful, you know, and then you'll trade out. And then, you know, your initial plan, some reason or another, we tend to forget our initial plan. We do that in trading. We had an initial plan. We saw the trade. I got to take that trade. Jump in, you take the trade. Like, oh, I got to take that trade. And a day later, our brain's telling us something different. You're looking at the trade and going, yeah, but I should do this and I should. Suddenly the initial plan's gone out the window. You've forgotten what it was, and you're thinking about something completely different. It's the weirdest thing. Strange, isn't it? For those of you who just got here and haven't actually had the chance to hear me talk about how I get into my trades in the morning and the differences between fundamentals and technicals, because we discussed both of those today, that's pretty close to the beginning of the video. But right at the beginning of the video, I was waiting for you all to come, so I was talking a lot of rubbish about other stuff. But there is a very strong amount of training in the beginning of this video about how we take our trades in the morning, and the difference between fundamentals and technicals. Go and watch that, go and enjoy it. So if you've just pushed up on the video, go back and rewatch the video and go and see for yourself what it's all about. And I hope you guys have liked the video. I hope you guys have actually liked the video, because that's always good. And it's nice to see lots of likes and that sort of thing. And if you haven't subscribed to the channel, make sure you've done that as well. That's also quite important. And for those of you who are interested in things like trade research and trade of the day and that sort of thing, then obviously a video every day for the members. Make sure you join on Trade of the Day and higher if you want the video. And let me just have a look at where gold is now. Still doing nothing. Wow, gold's going to drive me insane. Absolutely insane. It's not going anywhere. It's just sitting at this level, giving me a headache like all the other trades. And then oil is trying to go back up again. I did actually dump that trade. I took a short on oil. And you see this one again. It's because I was looking. And that's the biggest mistake we make, is looking. So I dumped the trade. I dumped the trade because... But I mean, really, it was very fundamental, because the fundamentals said, well, put the brakes on. You know, we're going to try and see how things are going. And we're still going to be in talks and all the rest of it. And maybe things will work out. And that you know... And then maybe not. And so it's kind of like, oh, all right, then we're just going to be sitting in another trade for the next 3 weeks. So let's just get out of it. To test 10-minute charts for day trading, I use the same strategy, and we should draw trend lines in the same 10-minute chart, but look for support and resistance on lower time frame like the 1 hour chart instead of the 1 day. If you're trading on 10-minute charts or 15-minute charts or 5-minute charts, don't take your levels from the day, because that's obviously not going to work for you. Then obviously, you know, see which one looks better. Maybe the hour, you know, the hour can work for you and give you a good idea, a good concept. Maybe the 30-minute, you know, maybe the 30 minutes going to be better for you on that level, just to give you a better concept. But what I would do, what I always did when I was trading 5-minute charts, and I did do it for a while. Why? It's soul destroying to trade 5-minute charts or 1-minute charts, because, well, you're trading 10-minute charts. Similar idea there. Because you win so many trades, one after the other, and pretty much you end up kind of scalping them and taking the money and what have you, because you're watching the charts all the time, and then one trade takes all the wins away from you, and it's soul destroying. I don't know how I came out of 5-minute day trading alive, to be fair, because it just drove me crazy. But yes, you know, what I would normally do to do that, so just to give you the information, what I would normally do is come to the day chart, and let's say it's oil, right? So I come to the day chart, and the first thing I pick up on the day chart is that there is buyers here, and there's a lot of sellers that came back into the market, and then there's buyers again. It's bearish in general. It's broken through that trend, so it is bearish in general, but there's buyers at the moment. So on the day, there's buyers on the day. Now, if I go back to my 5-minute chart, then I'm looking for buyers. I'm looking to see if there's any buys in the market. You know, what kind of levels have I got? So I can go and draw my levels off maybe the 30-minute or whatever, and then just have a look on the 5-minute chart. Where do I stand? In fact, if you're trading on 5-minute charts, the information is so weak that you might as well just take your levels off the 5-minute chart and see where you are. So what I'm looking for on the 5-minute chart is buys, and that's how I would work with it. Oil's maybe not a good example at the moment, because oil is standing still and indexes are an issue, but you can trade indexes on a 5-minute chart, for example. For example, I'm bearish on the UK 100. It looks to me like it's going to be a sell. Looks like it's going to go down. So if I trade on the 5-minute chart, what I'll do is I'll go down to the 5 minutes and say, okay, I'm looking for trades on the 5-minute chart, looking for bearish trades. And there you go. There's loads of bearish trades, and there's another one right there. So I might actually take a line like this. So, oh, let's just see. Yep, there's a bearish trade on the 5-minute chart right there. I might say, okay, let's have a look at that. If I don't want to do a line on the 5-minute chart, probably be better to do a block and just see what levels we've got here. How do the levels look on the tails, and then just see if it breaks through that and comes out there. you can just carry on going short and just sell it down to those levels much further on, and that might give you a good indication of where you need to be. So what I would always do, I'd always go to the day chart first, see what my levels are looking like, and then go back to my 5-minute chart and say, well, it's bearish, I'm going to take bearish trades and only take bearish trades on it. Don't know if that helps you if you're a day trader, but that's the way I used to work, and it worked for me, kept me in the game. So yeah. This info's all gold. Thanks. I'm glad you're enjoying it. Glad it helps you. You know, like I always tell people, I'm not telling you how to trade. I'm not telling you this is the way to trade. I'm not telling you you need to trade like this to make thousands of dollars or anything like that. The information that I'm giving you is based on my experience, the history, things that I've done, things that I've seen, things that I've dealt with. And I'm passing that information on to you. You can use it any way you want to. It's not financial advice, like I say. You can use it absolutely any way you want to. And say, well, that's what happened to Rob. Let me do the same thing and make the same mistake. You know, that's totally up to you. You can do that if you want to. Or you can say, let me avoid that and let me do it this way. So yeah, but unfortunately, the one thing I have noticed in trading over all these years, and I mean, that's 34 years of trading, and yeah, I've done other things in between with it and whatnot on the side and all the rest of it. I get that, but 34 years being in this game, one thing I can tell you is that every single trader that I've met, every single one, has made the same mistakes if they've been in the game for a couple of years, even if they were warned, even if they were told 100 times, Joe, don't go and do that. Rob, don't do that. You know, we all make the same mistakes. We all disbelieve the same things. You know how many times they had to tell me in the market that you make money with time in the market, not by timing the market. I mean, if they'd taken a sledgehammer and hit that into my head, I would have said, nah, get out of here. Don't need that. I can trade. You know, it took me years to figure that out, probably around 10 years before I came along and thought, you know what, maybe it's better if I figure out a system where I don't actually rely on the system, where I actually have a proper business plan and strategy in place, where I make more on my wins, lose less on my losses. And that was because they kept drumming into my head that you need time in the market. But actually you don't. You just need to make more on your wins. Same thing. But it's very much based on the same principle. Okay. And took a long time to work it out. It really did. So like I say, I just try to pass on to you guys where I've gone wrong and right, and where you can go right as well. I can guarantee you that every single trader sitting on this show, every single one, has had a plethora of indicators in front of their on a chart at some stage in their career. It doesn't matter if you've been trading 6 months or 6 years. I'll bet you guys have had hundreds of indicators on your charts at some stage or another where you can't even see where you are or what you're doing. And the chart itself is so small and there's just indicators everywhere. I can bet you've all done that. We've all done it. Every single one of us has done it. That's just one of the things, you know, so many different things that we do, you know, that we make the same mistakes. I'll bet every single trader sitting on this show, has tried to dollar cost average or loss. I bet you've all tried it. You've all worked it out in your heads that, look, if I dollar cost average this, I can get it back to cost and I can get all my money back. You've all worked it out. You've all done it. Every single trader sitting on this show has moved the stop loss away at some stage in their career. If you've been here 6 months or longer, you've moved the stop loss away. I know you have. We've all done it in the past. I don't do it anymore because I've been around for so long and I know the odds. But it takes a long time for the odds to set in. It takes a long time for you to figure it out, to understand it. And no matter how much I tell you, don't move the stop loss away, you'll still do it. It's human nature. There's nothing we can do to change it. It's human nature. It's who we are. It's what we do. It is. It's what we do. It's how we do it.
Um, is it better, easier to draw trend lines on a line chart instead of a candlesticks chart? There's a parody on YouTube Forex channel where the guy uses numerology to plan trades. It's pretty funny. It's pretty interesting. Numerology to plan trades. I mean, you know what I always say, if it works for you, go for it. I don't know, maybe it works for him. I don't know. Then again, maybe not. Yes, it's easier to draw on a line chart. When last did I move this to a line chart? Right, okay. So if I put that on a line chart, the trend line, this trend line probably needed to move anyway. If you put it on a trend line, on a straight line, it is much easier because you can see the point there, see the point there, see the point there, see the point there. But if you draw your trend lines on a line, in fact, in my earlier videos, I used to show you guys how you should draw your trend line in on a line chart before you draw it in on a candlestick chart, because your line chart gives you the closing price, and that's important, whereas your candle chart gives you the high and the low. I don't know if you knew about that. So obviously if you draw it on the line chart, you're drawing it in on the closing price, which is a much more accurate situation. But don't think of a line as a line. Don't think of it as a line is like a roadblock, and when the price gets there, that's it, end of story, and that's the point. No, there isn't a line in the world that says, ooh, there comes the price, stop, go back, I'm a lion, you can't go past me. There isn't such a thing, right? So think of a line as an area, okay? So that's why you don't really need to do this if you don't want to, or if you don't want to get to that scenario. You can just leave it as candles, and you can draw it in as candles and make it a bit wider. And you know, when it breaks through there, this isn't like, oh, it's on the line, you have to, like, you know, abide by the line. No, it's like a block area. It's like when I draw it in a straight line like this, and I draw it as a block more than anything else. This entire area is the resistance, the entire area, not just the line. And you can rely on that area as a sort of area to work with. The reason I draw it in as lines myself is because it's just easier to just clip a line in there and I know where it is. But I'm looking at a general area and I know that. And the same applies to a trend line. It doesn't have to be exact. It's just a general area of concern, because you'll see a few times where it'll actually break through and then come back and straight back up, and you think, but it actually broke through. How did it do that? No, the line's not, like I said, someone standing there going, I'm a line, you have to go back now. It doesn't work like that. It's a general sort of area where there's money, where there's other traders, where there's institutional money, where there's loads of people buying and selling stock, and it might slip a bit. Call it slippage. There might be a little bit here and there where it goes through, comes back. So there's a gap, there's an area in there. So yeah, it's easier to draw it on a line chart, totally, and you're drawing it on the closing prices, which is fantastic. It's always good. Even your support and resistance, you draw in on the closing prices. You know, you're going to get a good level. For example, if you take this to the day chart and you put it on a line chart and you say, now I want to draw it, you know, I want to draw this line in, you know, you can look for a much better line, or over here as well, you might want to look for a much better spot, you know, and say, well, it's cross there, but it is still that area over there that you're looking at, bottom top. You're drawing it through the middle, through the piece there. You might get a more accurate line, but like I said, a line isn't a thing that goes, I'm a line, you can't go past me. It doesn't work like that. Okay, so just so you understand that, it's a general gap. But I'd love to know what you know, how you trade with numerology. But there are some people that trade with the phases of the moon. That's interesting. Imagine that. Or I don't know, is it buying and selling, or just trading, or what? As I've always told you guys, trading is 50-50, right? So every time you take a trade, There's a chance that it's going to go up. There's a chance it's going to go down. There's a chance it's going to go well for you. A chance it's going to go bad for you. There's no way around that. Doesn't matter what your risk to reward is, what your system is, or what your edge is, or anything like that. What matters is you understand that there's only two things you need in trading. You need to know when to buy. You need to know when to sell. And gosh, if everybody knew the answer to that, everyone would be billionaires overnight, because that's just impossible to know the answer to. So now think about this. Nobody knows the answer. When to buy, when to sell. But we think we have an idea of a probability when it's a good time to sell. So there you go, I'm going to sell. Now you sell. There's a 50% chance that you'll have a successful trade. Doesn't matter what your system is. Does not matter how good you think you are at trading. There's a 50% chance that it'll go in your favor or it'll go against you. That's just a fact. You can't get around that. You can't change that. The sooner we get that into our heads, the sooner we understand how that works. If it wasn't like that, then obviously we would all know when to sell and when to buy, and it would be great. We'd all be rich overnight. We'd all be billionaires. But it never does work like that. In fact, even people who think they got it taped don't have it taped. You know, if somebody says to you they've got a win rate and they like win all their trades, it doesn't mean that they're effectively winning. It just means they have a win rate. It just means that they're winning a few trades. But I can also win trades at 10 bucks, 10 bucks, 10 bucks, 10 bucks, 10 bucks until I take a big loss. If you're targeting your targets properly, you're never going to have that kind of win rate ever. And the thing is, you can have a lot of luck, right? For example, you can choose it right a number of times and make 20 bucks, 20 bucks. Maybe your system's really good, but there'll always come that time where it'll take all your wins away and wipe you out. So win rates are a bit of a joke, to be fair. They're not gonna make you money. They'll just give you a wee bit of information here and there. Okay. Well, that was the UK that we were on. How's our US dollar Canadian dollar trade doing? Oh, it's doing quite nicely, but I am on the weekly after all. But there you go. That looks like that's going to make us some dosh. You see, that's a question that I do like, and that is, how many trading books should one read before becoming profitable? My answer is none. Don't read any trading books. Get in the game, learn how to trade. So I didn't. Oh, no, not really. I actually did have a file. That's how I got into trading, actually. Like 34 years ago. We didn't have computers. We didn't have, well, we had pens and pencils and calculators, let's be fair. And someone came along and said, yeah, you know, if you get in, you buy trades, you buy low, you sell high, and then you make money, and you know, all this rubbish. So I got involved in it, and I bought what was then a course, a file, and yeah, I went through that. Okay, and that's how I got into trading. And then, you know, that file taught me something, and it was very basic, but I left it all behind, and I really taught myself from there on in. I really enjoyed it. I enjoyed learning, and I enjoyed picking it up for myself, and it was a dream when computers came along and all that. But really, that gave me a guideline, a basic. These days, you can get that same guideline right here on YouTube, like I'm giving you now. So you've got a guideline, then you can go out and you can start tweaking that and working around it and seeing what works better for you, and, you know, practicing and what have you. So yeah, how many books do you need to read? None. You don't need to read any. You really don't. If you're going to read a book on psychology. Read a book on the psychology of trading or psychology. Understand the human mind, understand how you think. That's what's going to help you at the end of the day. Do the psychology books. Those are the good ones. These charts, I can teach to a 4-year-old child starting out in school. I show him these charts and say, this is where you buy and this is where you sell. He's going to be able to do it. In fact, if I can teach it to a robot, obviously, but programming, there you go. This is where you buy, this is where you sell. What you can't teach is the psychology. You know, we can talk about it, but I can't tell you how to think. I can't tell you how much fear you're going to have, how much patience you got to have. That you got to figure out. And the psychology books will help you along those lines. They'll help you with, you know, the psychology of trading. But these lines, there isn't a book or a course that's going to help you with this. This you can learn in 5 minutes. This is straightforward. Bit of practice, bit of going over it, you get it. It's just a system. The application of the system is all in the head. It's all in the fear. It's all in the psychology. It's all in how you apply it. Like I said to you in a couple of the other videos, is if I take two traders, okay, let's say you got one like me who's got 34 years experience, trades a certain way, trades with support and resistance. So right, you trade here, and then you take Joe Soap, who's got 6 months experience, and it's a totally different type of trader, and he trades on the same charts. And then you take another trader who's got exactly the same experience as me, and he's got his own way of thinking, and he trades on the same charts. All three traders will experience a different result. Completely different result. Completely different. One because of experience, and the other because of two totally ways of mental thinking. Two total different fear levels, patience levels, FOMO levels, fear of missing out. All those things apply. Maybe also a different adjustment to the amount of money that you're trading, the different, also how much of it is your entire wealth or just a portion of your wealth. You know, there's a big difference between Warren Buffett trading $100,000 and maybe a dude who's just retired who's got $100,000 to his name, and he takes the $100,000 and starts trading it. For Warren Buffett, it's a flick in the pie and it's nothing. I'm just having a trade here. And for the dude, it's his last $100,000. He's going to be sweating and struggling, and he's not going to have the right mindset when he's trading, because it's all the money in the world to that person. So that too, you see the difference in psychology when two people are trading together. It makes an insane difference. And then the other thing that psychology will teach you is that this is 50-50. That when you take a trade, you have a chance of winning, you have a chance of losing, because then nobody can tell you when a good sell or when a good buy is. Nobody can tell you when to sell, when to buy. They can give you an indication. So we equate it to a coin flip, where if we flip the coin 10 times, you'll agree with me that 5 times it will land on heads, 5 times it will land on tails. There's no two ways about that. That's just how it's going to be. Maybe it'll land 4 and 6, something like that, but let's just hypothetically say it'll land on tails 5 times, heads 5 times. That's how it is. But if I told you I'm going to take 1 for every tails and give you 2 for every heads, there isn't a trader in the world that wouldn't take that bet, because the odds are in your favor. You're going to take heads because you can win 2 for every heads and only 1 for every tail, so you're going to go with the heads. You see? You're going for the bigger win. You're going for the winning trades. You're going for the win more on your wins and lose less on your losses. Thank you, you're a good man. I will be watching. I'm glad. Good to have you on board. Yeah, make sure you subscribe and like the video and all that. Yeah, no, it's an interesting game. Always has been an interesting game. And yeah, no one's cracked it yet. You know, there are people out there, you know, when people talk about people, for example, we name drop now, we talked about Warren Buffett, for example, and everybody thinks he's a trader. He's not a trader. He's an investor. He invests in the market. He buys shares in companies and he watches them grow. And that's what makes him so wealthy. He's not a trader. You People talk about Jordan Belfort, for example. No, he's not a trader. He's sold penny stocks to people for an increased inflated price at 50% commissions. And that's how he made his money, you know? There's always someone out there, you know? It's just, trading is not for the faint-hearted. 75% of traders lose on 4-hour, 1-hour daily charts. 99% lose on 5-minute charts. And it's because it's all about the psychology of it. It's all about how you apply the psychology. And like I say, the most important thing is don't sit and look at charts all day. You see, because we have an investment account, I understand better that you sit and forget it. So the investment, you buy it, you leave it, you forget about it. So why, when I take a trade, am I sitting watching it all day and making stupid decisions because big red candles appear and I think, ooh, must get out of that trade now, and then I lose my money? Why am I doing that? When what I should be doing is coming in the morning, like I say, choosing my trades, putting a stop loss in place, putting a take profit in place, and then just managing it through the day, as you do. Like we did with the Canadian dollar earlier, we had the stop loss up here. We looked at it. Oh, look, I need to move the stop loss move, trade managed. Now leave it, forget about it, come back later and see if it needs to be managed again. You don't need to sit and look at the trades, because if you sit and look at the trades, you're going to have the problem of seeing a green candle, seeing a red candle, and making the mistake of trading it. And you don't want to be doing that. You want to leave it to play out as much as you possibly can. Trading out of a trade early is one of the biggest factors. For example, here's this trade. You know, you look at it and you think, oh, I'm in a profit. Click, let me get out. Let me go. I mean, I've got 50% of my profit here, so 50% of my target. So I should just get out and get the money and go. It's a profit, isn't it? That's the point. You want to make more on the wins. You want to be making more money on the wins, and you want to be making the targets. You see, if I click out here and I take that profit, then I can go and boast to my friends that I've got a decent win rate because I made a profit. See, I made a profit. But how much profit did you make based on how much you were risking? How much profit did you actually make? And then you find out that you're making less profit than you're losing because your losses, if this was a loss, you would let it run all the way. You would let it go. You wouldn't be prepared to get out of the trade. You'd be like, no, I'm holding on to that. I'm holding on to that. I'm waiting. It'll turn around. It'll turn around and I'll get out of this trade. And you'll let it go all the way down to the stop loss. And then worst of all, you'll move the stop loss away, because I don't know any trader who hasn't done that. You'll take the stop loss and I'll just get it out of the way and let it go a little bit further and see what happens, and just keep on losing. But when it's a winning trade, like it is now, like it's a winning trade, it's a short, and you're thinking, well, that's a good short. Instead of letting it run, because that's what you would do with your loss, instead of letting it run and thinking, well, we'll just let it run and see how it goes, you get out of it. You get out of it early and you jump out of the trade. Don't do that. Think of it like a loss. That's why it's lovely to trade short as well, because you look at it and think, well, if I thought of this like a loss, there's no way I would get out of this trade now. So why am I going to get out of it if I'm winning? Just going to leave it, aren't I? Same thing. It's important to understand that. Okay, trailing your stop too close is an issue. Look, what I did here, it is a bit close as well, to be fair, but there is enough distance. It was way up there, the stop loss, and I've moved it down. It is a bit close now. Come on, I mean, ooh, yeah, there's a profit there. But it's still far enough away for me to say, you know what, there's a gap here. It's going to take a while for it to get up there. The stop loss is a little bit close now, but there is still enough space to let it carry on going, because it does look like it's going in the general direction of the other way. And if it does go back and take it out, I'm kind of like, well, the way I look at the trade is if it gets to that area, then the trade is kind of going the wrong way. It's kind of going against me, and it's kind of not much of a great trade if it gets to that level. So I'm looking at it like, okay, let it go. Let it go. That's why I put it down there. That's why I moved the stop loss down there. But if you move it right up behind here, that's far too close, or right up behind here, that's far too close, because it could easily bounce there and take it out. So I put it far enough away to say, well, if it does get up to there, if it does really go back up to there, do I really want to stay in it? Do I really want to be around anymore? It's probably changed direction and going the other way again. So let's just deal with it, and let that be. But as it stands, there's enough space for it to keep on going down. So look at it from that perspective, And also, if you're just slightly in a win, don't move your stop. Just leave it until it gets to a decent area, until it gets to a decent point, and it says, you can put your stop here now, and you can move on. Like gold, for example, a good example. I'm in profit. Not a bad profit. It's a profit. Okay. Now, I could move my stop loss up to here now and say, well, my stop loss is at cost. But in this case, if I move my stop loss up, it's in an area there where it could get taken out. And I don't really want that. It's too close. It's far too close on this one. If I make that narrow, you can see why. It's far too close on that one. Let's just do that. It is just that distance just doesn't justify the means. I need my profit to be somewhere up here. Then I'll take this and move it into that level and give it a bit more legs, more room to maneuver. So that's, moving your stop loss around it. Just move it at the right time and that'll be okay. Now don't trail your stop loss too close. Never a good idea. So today we discussed, very importantly, what I do in the morning to take trades. First I look at the fundamentals. Then we go and we do the technicals and we look at the technical trading. And I also discussed the difference between fundamentals and technicals. Really important. If you didn't see that and you've just come onto the video and you don't know me, I'm Rob, go to the beginning of the video and go and watch that. It's really going to be useful to you. Perhaps, I don't know, maybe it'll help. But as it stands at the moment, I'm going to head on my way. It's going to be the end of the live show. I'm going to end the live show here. And I'm going to see you guys on Thursday again. If you remember, I'll see you tomorrow morning for the Trade of the Day video and whatnot. But if you're not, then I'll see you back on Thursday for the live show. Do go and watch the other videos and whatnot. I've put a couple of interesting short ones out which tell you how to trade reversals and things like that, which might be useful to you. Don't know, maybe not. But guys, for the rest of you, thanks for watching. Thanks for being here. And I hope I'll see you again soon on the next live show where we'll talk about something different and something more fun. Till then, cheers, ciao, and bye. Make lots of money.
Join us in our members area and become part of an amazing team of traders. Join us in our members area and become part of an amazing